This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. So in today's video, I want to talk about the difference between income producing strategies versus wealth producing strategies. And the reason why I want to do that, and I probably should have done this a while back, is I think you need to understand how this can work in your favor or work against you, and also know which strategies are the ones to favor at different points in time. I'm a big believer in knowing how to take advantage of short-term movement and also be able to take advantage of longer-term action. So let's go ahead and get into this because I think it's a worthwhile. Now, I'm going to warn you, I'm not going over a lot of charts. I'm not going through any charts today, but I don't want you to think that this is not important. I've gone through so many different strategies, all the different setups that I like to look for, but this is something I probably should have done a while back. So let's go ahead and get into this. So I want to talk about the difference between income producing strategies versus wealth building strategies. All right. And what that means is income producing is something that is going to, when you produce an income, you tend to have to be hands-on. You have to be there. You have to be watching. It's much more of an active management style. It's not really what I would consider to be passive. Now, the way I do the wealth building is not, depending on the style that you're doing it and how you're going about finding the ideas, it's also not a passive approach, but it is much more passive than what happens on the income side. So let's go ahead and get into these and let me just explain what I'm talking about. So if I'm trading for income, I've got a couple choices. Number one is intraday trading, and intraday trading could be scalps, and I'll go into that in detail in a second. Or it could be an intraday trend trade, and that's where you're trying to take advantage, take targets, but you're trying to milk the trade a little bit intraday. Normally, what I suggest is trying to get in, even if it's late morning, you're trying to get in and see it through the cycle of that trade and it looks like the time frame that you're trading on is starting to lose momentum, then you exit. But it's a lot different than a scalp. A scalp is more oriented towards I'm getting in, I'm getting out, I'm not trending, I'm not looking to trail a stop or anything like that. It's very, very quick. Now, the other income producing side is swing trades. And on swing trades, you can use the daily and hourly. And typically, we're looking for trades that'll last somewhere between 1 to 5 days. Again, I'll go into that in a little bit more detail, but the reality is that what we're trying to do is buy at the end of a consolidation pattern where it looks like we're starting to emerge out of a consolidation and then sell when we get expansion. So that's in a nutshell what I'm looking for when I'm trading for income on a daily and an hourly. And that's actually one of the courses that I'm going to put out that is included with my trend trading course. I haven't actually added yet because I want people to go through the fundamental course, but I have the outline of it. I'm putting it together right now. Okay, let's go to the next piece of this, which if I'm looking at these intraday scalps, what I'm typically doing is I'm using a 5-minute as my upper time frame, and then the 1 minute is my main time frame, and 10-second is kind of like my trigger time frame. Okay, so very, very active management style. If you want to go up and look at like a 30-minute chart and get a little bit more detail as to what is happening for the day, I definitely have no problem with that. But it's not necessary in this strategy because what you're trying to do is get in and get out. This is typically best when the market's really, really active. All right. The other option is using a 10-minute, 2-minute, and 30-second. And again, when I'm talking about a scalp is typically something where I'm not as overly consumed about getting 3 to 1. I'm not really saying, okay, I'm going to risk this much to make this much. I'm trying to get a leg in my favor and pretty much just take it. And I'm not really looking to trail a stop. I'm looking for a little bit more accuracy in my trades. And if I can be up around 60, 70%, I can do pretty well trading this way. Now, every now and again, you might take a partial profit and then know that you're in something bigger because you've looked at the bigger time frame, like a 60-minute or 30-minute, and you might be able to catch something a little bit more significant. Where I find this to be really advantageous is when the market is going nuts, and usually on the downside, a lot of market movement, massive swings intraday. You can get some really nice scalps taking place. Now, intraday trend trades can take place at any point in time. However, I'm going to talk about this at the end. You want to watch the ATR, the average true range of the S&P, and when it is rising, these tend to be really good trading areas to be focused on. You can make pretty good money trading intraday when the average true range on a daily chart on the S&P is rising above its 18 MA. That means the volatility is going up. And when volatility is going up, you can look at 60-minute, 10-minute, 2-minute trades. Now that means that the 10-minute is your main time frame. You're trading off of a 10-minute setup. So you'd be looking at, like, just as an example, you'd be looking at a pullback to a rising 18 on a 10-minute chart where you have some kind of a pattern on the 60-minute suggesting maybe a reversal pattern or something like that. And then you trigger off a 2-minute. Now, the other way, and I've done both of these successfully, I can tell you for a fact that you can go and do this 30-minute, 5-minute being your main time frame, 30-minute being the upper time frame, and then the 1-minute being the trigger time frame. Now, you can look for breakouts or pullbacks, and as I've talked about and I go through in my course, there's just a lot of detail when it comes to the entry time frame. You have to know whether you're looking for a breakout time frame based on the low ADX condition, and sometimes that'll take place even on a 1-minute or a 2-minute. And I've shown you some examples of intraday trades like that where I'm watching a low ADX condition on one of these time frames saying, okay, when this breaks out, I want to get in. But you want to have the bigger time frames in your favor. You don't just want to take 1-minute or 2-minute breakouts. All right. So again, I think just make sure you know the condition of the market. The market conditions are incredibly important at knowing when to do these intraday trend trades. And the same thing on the scalps. If we have a market condition where there's massive volatility, big movement taking place, this is really where these can come into play. Yes, it can happen very, very quickly. I mean, I've been in some of these trades where, you're in and out in a minute or two. And that's really the goal of a scalp. You're not necessarily, trying to be in there for a half an hour or something like that. To me, the longer you're in a scalp trade, the higher the probability it's a losing trade. Okay, let's move on. I want to talk about the trend, the trading for wealth. So we've got swing trades. And a swing trade, the way I define it, is where you have a definitive target in mind. I just did a swing trading video or show with Bruce Frazier where he shows how he uses point figure charts on Stock Charts TV. And it's still out there on YouTube or on the on demand if you want to take a look at it. But the way I define swing trades is not necessarily based on time or time frames. It's based on the fact that if I'm looking for a specific target in mind, I know I have a trade target in mind where I'm going to take the target and not necessarily trail a stop. To me, that's the difference between swing trading and trend trading. If I'm in a trend trade, I'm trailing a stop. I might be scaling out, but I'm trailing a stop and I'm seeing how far it'll go. On a swing trade, I am exiting. I don't care how far it'll go. I'm going to exit at my target. You can do that on weekly, daily trades, on the pullback trades, on the breakout trades. You can do that. Now, trend trades, you can do, so the same idea here, the trend trade can be done on a weekly and a daily, or it can be done on the monthly and weekly, obviously, and we're looking for really big moves on those. A lot of the newsletters that I send out each week for my subscribers are focused on these two categories, trend trades, monthly, weekly. and trend trades weekly, daily. However, you can take the setups or the patterns that I'm showing each week and turn them into swing trades if you would like. Again, the difference being how you handle the profits taking side. So let's just look at this in a little bit more detail. So weekly, daily, you can have a breakout trade or a pullback trade for a swing trade. You can do it either way, meaning you can take the breakout trade and just trade it for a specific target. It probably is going to be, the next resistance zone or some of the more sophisticated ways that I suggest my subscribers use. And then the other way is trend trades, where I'm looking at a weekly and a daily, and I'm really looking at breakout trades or pullback trades. The difference is how I take profits. I might be I will be scaling at key levels and at my 1R and 2R and 3R potentially, but I'm trailing a stop at some point and seeing how far this will go. And there have been some day trade, weekly, daily trend trades that have lasted a really, really long time. The other side are the trend trades where I'm using a monthly, weekly, and almost every one of these, and they are breakout trades or pullback trades. And really my strategy here is to scale and trail. And I have been in trades monthly, weekly that lasted years, 2 to 3 years I've been in. If you do it the right way, you can scale out. And then this last piece, typically you could do thirds or quarters, but if you do the third or quarter, the last third or quarter, you can make a massive amount of money if it keeps trending in your favor, if you catch the market right. And I think these are great things to have on when you're trying to build wealth. Okay, so what we're trying to do with this is strive to have one income producing strategy on and one wealth producing strategy on at the same time. Maybe not all the time, but as much as you possibly can. Now, this might be difficult. And here, I want to make sure I preface this by saying, if you have gone a year and you have tried income producing strategies and you just have not been able to make money at them successfully, and you have a documented log sheet that shows that you're just making a lot of mistakes, or you don't have the time to do it, right? If you can't trade intraday, then that's probably not a good idea to try and income produce using intraday strategies. Now, you should be able to do swing trades, short-term swing trades lasting 1 to 5 days, even if you're not watching the market during the day. I can show you ways to go about doing that. And again, that's part of a course that I'm putting together. Now, the other thing that I wanted to say is that if you have gone a year and you have a log sheet that documents that you're not good at wealth producing, okay, then you can skip one side or the other. If you really are much better at one side or the other, and you're typically going to be better than the other, but it's really about, can you make money? And you have to go through a full cycle in the market, because you got to understand, if the market has a rising volatility environment, it's going to be a little bit harder to make money swing trading for 1 to 5 days. Okay, if you have a declining volatility environment, it's going to be much more difficult to income produce using intraday strategies. Okay, now if the weekly volatility is going up, and you're trying to go long using monthly and weeklies, well, you're pretty much fighting the trend. So there are some things that you have to understand about the market overall to know when to favor certain areas or others. I really like the weekly and daily combo because you can find income producing strategies and you can find swing trading strategies, and you can kind of base that on the environment. Now, in terms of the environment, what I would do, and what I talk about every Friday in my video, is what's going on with the S&P ATR and the trend. What's going on the daily trend and what's going on the weekly. Because if we can focus on that, I think that can really help us know where to spend our time, where our time is best spent, where we can make the most amount of money. I'm not saying that you can't make money intraday trading when the SPX ATR is declining. I'm just saying that you're going to put a lot more effort involved and probably make less money than you are when it's the opposite, when the S&P ATR is rising above its moving average. So keep all these things in mind when you're going through and thinking about putting a trade on. I mean, you want to have this as a part of your plan. You got to decide if you don't have the time to intraday trade, then that makes it really easy. And then if you figure out that you're just not all that great at swing trading for 1 to 5 days, okay, then what you want to do is just, instead of have those on, have that portion in cash when the market doesn't look great. So let's just say we're in an environment where we've got kind of a downtrending environment, and you might be swing trading if you're good at it, okay, and putting on those trades in if you don't like the intraday trade, but you will have less money at work during those periods because you're not going to have as many trend trading opportunities on the monthly and the weekly. Now, there are a few times, historically speaking, where we can actually really trend to the downside, but that's typically where the 18-month has rolled over on stocks and the market, and we failed at those lines, and we're really trending from that standpoint. And when that's the case, then you could actually put trend trades on to the downside, especially using weekly and daily. All right, so I've gone through a lot. I really think this is an important video based on my strategies. I want you to understand how to implement all this. So let me know if you have any questions or comments. Thanks.